Well, let's get straight to our movers and shakers segment then. And let's start off with Odisha Cement. Remember, the stock is under pressure. It's down close to around 4% today. And it's trading only in the cash market. If it was in the F&O market, my guess is that, in fact, that fall would have been far more severe. Still, it's down nearly around 5% and falling on rather large volumes as well. Let's take you through the news first. Yesterday, post-market hours, the management, that's the Dalmia Bharat management, they had put up on the exchanges that mutual funds valued at around 340 crore rupees, they were illegally removed by the DP from their demat account. Now, very, very surprising. We don't hear of this very often, or we have never ever heard of something like this happening. Let's take a couple of cases. Case one, things get resolved. They get the 340 crores odd. The stock recovers and life moves on. Case number two, questions are being asked. 340 crores is not a very, very small amount. Remember, they have gross debt of more than 6,000 crores odd. So that amounts to nearly around 5% of the gross debt in its books. And if you look at the net debt, that's more than 3,500 crores. So even in terms of net debt, it's roughly around 10% approximately. If you see the difference between the two, the management maintains that they have cash of more than 3,200 crores. Now, given that situation, this will be nearly around 11% of the total cash in its books. The shareholders are hoping that this money does come back. There was a SEBI interim order as well that came in yesterday on Allied Financial Services. They say that the broker uses mutual fund units as some sort of a collateral to trade in the F&O market. The big question is, there was, Dalmia Bharat had approached SEBI on Feb 7th. Why didn't they tell the exchanges at that point of time? And the street clearly doesn't like this. The stock is under some pressure as we speak.
Okay, thank you very much for that. And global retail giant 7-Eleven may be a step closer to setting shop in India. Sources say the board of Future Retail will be meeting today to discuss a tie-up between Future Retail and 7-Eleven. CNBC TV 18's Priya Sheth has this exclusive. Priya, you've been on top of this story. Take us through the contours of the deal as you're picking up now.
Well, sources tell us that the board of Future Retail will be meeting today to consider the tie-up with international convenience store chain 7-Eleven. This means that Future Group will be able to bring 7-Eleven to India if the deal goes through, and it will be through the master franchise route. That is what sources are telling us. But of course, as far as the details of the contours of this deal are concerned, we understand that the deal is likely to be a revenue sharing model where there will also be some amount of technology transfer that will happen as a part of this overall deal. But it's a long-term franchise agreement that we're looking at. About 70 to 80 years is the kind of time frame is what we do pick up. But of course, this deal is in line with Future Group's small store strategy, because do remember that Future Retail has about 1,300 small stores under it, and it has an ambitious rollout plan of bringing about 10,000 stores very soon. But of course, as far as the specifics or the details of this deal are concerned, the parties are working upon the kind of rollout that will happen on a pan-India basis, but it should take about 6 to 12 months for the rollout to begin as far as 7-Eleven stores are concerned. In fact, we'll have to wait and watch how this plays out. We're not sure whether there will be a concrete decision at the end of the board meet, but this definitely is an issue that the board will be taking up today.
Okay, Priya, thanks so much for that. Let's hop across to Mangalam. He's joining us to tell us all the stocks and the news. Mangalam?
Well, Nigel, a handful of stocks. We start with GAIL because the Petroleum and Natural Gas Board of India has hiked the LPG prices, or hiked the tariffs for the LPG prices for the companies Jamnagar, Loni and Vizag Secunderabad lines by about 9%. These hikes are applicable from November 1, 2018. So 3 months ahead is when these hikes are applicable from. Tata Metallics, that stock also in focus as the companies announced a capacity expansion plan for their DI pipe unit, for which they will be outlaying around 555 crore rupees. And the interesting part is this will be done by issuance of equity shares, convertible warrants to Tata Steel on a preferential basis. So that is the sort of money that will be used to increase the company's capacity. Quick Heal, that stock also in focus. The board is likely to meet on March 5th to consider a buyback, so that stock on the radar. Vascon Engineering, they've received a work order of close to 83.5 crore rupees from the Airport Authority of India. That stock in focus. Quest Corp, ICRA has upgraded the company's rating from ICRA AA- stable, and the outlook is positive. And finally, Jet Airways, that stock is lower as 7 of their aircraft have been grounded on account of non-payment of dues to lenders.
Thank you very much for that. A quick recap then of the top stocks. Odisha Cement, Future Retail, that's a big deal to watch in fact. GAIL, Tata Metallics, Quick Heal, Vascon Engineering and Jet Airways.